I'm Taylor Riggs in San Francisco. This is Bloomberg Technology. Coming up in the next hour, record rollout. It was a new high for Tesla deliveries, but they did not meet Elon Musk's lofty prediction. We break down all the numbers for you. Plus, impossible to resist, the meatless burger craze looks like it's here to stay. We have an exclusive conversation with the CEO of Impossible Foods. And Microsoft stopped making phones years ago, and now they are back with a new model that will run on Google's Android system. Is now the time to be getting back into the slowing global smartphone market? But first, our top story. Elon Musk's 100,000 delivery goal was not met. The company reported it had 97,000 deliveries in the third quarter. Shares are falling on late trading on Wednesday after the news broke. Earlier this week, analysts mentioned that the 100,000 delivery goal may have been talk in order to divert attention from the potential for a less flattering trend, falling revenue. To discuss, I'm joined over the phone by Gene Munster of Loop Ventures, and with me in Detroit, Bloomberg's David Welch. David, let me start with you. 97,000, a record, but not 100,000. Is it good or bad?
Yeah, so look, it's a record for them, but it's not a record by much. And then you had Musk saying that they could probably get to 100,000 vehicles if they pushed. I do wonder if he hadn't said anything, if the shares would be reacting better, because it really was a solid quarter for them. I think the other more alarming thing for investors is the fact that most of the vehicles being sold are now lower priced, lower margin Model 3s, and you're starting to see a lot less take on Model S and Model X, which are the really expensive vehicles. And the question for investors is, okay, where are the profits going to come from if you're selling a lot of these smaller, cheaper, lower margin vehicles?
Gene, what's your take on the 97,000 number?
Taylor, I think it's a great number. I am in the camp also that it would be perceived as much better if not for the Friday email. And I think that there's two topics here. There's what's going on with the fundamentals of Tesla, and then there's what's going on with the communications around the story. And Elon Musk continues to say things that are not good for the stock in this case. And separately, if we just look at the fundamentals, which ultimately should be the most important, is the fact that they got a record. The 97, just to put that into context, that puts them loosely on track to hit the low end of a range of 360 to 400,000 vehicles for the year. But when they originally came out with that range, investors said it is near absurdity that they would do that, and they are tracking towards that low end. So I think that it is, despite the mix of the greater Model 3s, it's 82% Model 3s. It's generally consistent with the mix in the June quarter. So my simple read is I think that this is a sign that the demand question, this is no longer about a production question on Tesla, that the demand question continues to be answered, that it seems that the U.S., at least, and parts of Europe, are ready for EVs.
And Gene, what's your take on what David Welch was mentioning, that they're sacrificing price and those margins for the sake of market share, selling those lower price vehicles?
My view, it's true, that's a fact. But my view is that the sweet spot of electrification is going to be in lower cost, lower margin vehicles. And it's still, call it 2% of vehicles in the U.S. So I think that even though that is at a high level, that is not a good trade from higher margin to lower margin, but just the size of the market is so massive. That's the real sweet spot of the S-curve. I think it's the right thing for the company to continue to aggressively pursue that part of the market.
David, how is demand in China?
There's very strong demand relative to other markets in China for electric vehicles, and the government certainly helps that with a lot of programs there that both make manufacturers basically sell these vehicles there for certain credit systems, and there are a lot of incentives for consumers to buy them. In some of the major cities, you can't get a new registration for a vehicle unless it is some kind of plug-in car. So there's good demand there. To Gene's point, and it's a very good one, is to get the demand, to get scale, they're going to have to sell a lot of Model 3s, a lot of lower priced vehicles. That is what's going to build this market, and there's certainly an appetite for it in China and probably Europe as well. The question going forward is still one of margins, though, because Tesla's going to have to lower costs and show a profit on these vehicles. You know, they have a very big staff at the plant. They're not the most efficient manufacturer. They've been trying to lean things up in Fremont, and they will in their new factories as well. But they've got to show that they can make a profit on these vehicles as they ramp up volume. And that's just going to be a matter of building up their systems and getting better scale, and proving that they can really operate this company. The shares are no longer really trading on the hope that they're going to grow. They're going to be trading on whether or not they can execute the business.
Gene, any path to profitability?
Yeah, I think eventually, yes. You know, that scalability that David's talking about, they're taking this approach of kind of fit to print with these new, whether it's Gigafactory in China or what they're going to be doing in Europe. So the markets more recently have not been favorable to companies that are losing stories. That's not news to anyone. But I think what is still important is when you have these massive opportunities, I think electrification falls under the group of an undeniable truth. I think that investors will be, despite the trend in the market towards profitability, I think they will be more lenient towards Tesla. I think they have been. And I think they will continue to give the company room. As long as the demand is there, I think that they will give them room in the path to profitability. And if I'm wrong, and they continue to burn cash, I don't know what the cash burn is this quarter, I think that if the demand continues to be there, I think they will be successful at continuing to raise money. They don't need to raise money for a few years, but I don't think that profitability is the critical question right now. I think demand is, and they're doing a great job.
And Gene, we've been talking all week about founders becoming CEOs and corporate governance issues with companies like WeWork et al. Any pressure on Elon Musk and his corporate governance to change here?
No additional pressure, but he's been, I think if you just look at the number of people who have left, it's symbolic of an organization that runs fast. And I think his leadership style burns people out. And Tesla would not be Tesla without Musk, and ultimately I think it's a good thing that he continues to play the major role at the company. But the stock would go up if they brought in some more seasoned type of management team that would stay.
Loop Ventures managing partner Gene Munster and Bloomberg's David Welch, thank you both for joining me. And coming up, slow down fear sell-off. The stock market does hit a low, and more indicators of the U.S. economy that could be hitting the brakes. We look at how tech fared in the red. This is Bloomberg. U.S. stocks hitting their lowest level in a month Wednesday's economic slowdown fears continue to mount. The NASDAQ, S&P, and Dow were down all about 1.5%. This is as private payrolls fell short of estimates a day after a manufacturing indicator slumped to the lowest level in a decade. And the tech sector was not immune to Wednesday's pain, as both the S&P Tech Index and the NYSE FANG both were in the red. Interestingly enough, though, the chip sector outperformed the S&P during the sell-off. To tell me more, I'm going to head to New York, where Bloomberg cross-asset reporter Sarah Ponczak is standing by. Sarah, the stocks outperformed the S&P 500, which to me was pretty surprising. How did tech do today?
It was surprising. It was very interesting because you absolutely had tech participating in the sell-off. You look at it at a sector level, technology was your third worst performing sector in the S&P 500, but it is very important and interesting to acknowledge the fact that this was not a tech-centric sell-off. I mean, you mentioned the fact that the Philadelphia Semiconductor Index actually outperformed the S&P, but even if you just look at the major benchmarks, if you look at the order declining the least to declining the most, I mean, you had your NASDAQ Composite and the NASDAQ 100 falling less than the S&P 500 and falling less than the Dow. Typically, when you see a tech-centric sell-off, you would see these very tech-heavy benchmarks falling more than the average, but that wasn't the case. And interestingly enough, too, though, because this really was about growth fears carriers. You saw a lot of selling in transports. You saw a lot of selling in auto stocks as well. But interestingly enough, when you think about tech, you break it down between hardware, software, and semiconductors. Typically, semiconductors are your area, your industry within the entire sector that you tie into the economy. But semiconductors did not just only outperform the S&P, they actually outperformed hardware and software stocks too, which was a pretty interesting twist.
Well, and we've seen Elizabeth Warren rise in the polls recently as we look to the elections coming up soon. Does she have any role in this as she's been making big calls for breaking up big tech?
So some people have absolutely been pointing their fingers. And if you do look at predicted online betting markets, if you look at the odds of Warren clinching that 2020 Democratic nomination, it's now risen to 45%. And we really saw a lot of these gains come last week. And we saw many of the sectors, not just tech, that are very intertwined with Elizabeth Warren's platform. We saw them decline. Now, you have seen Facebook in particular moving a little bit outside of the tech space, but very much considered a big part of big tech and social media. You've seen Facebook down 7 of the last 9 days. There were leaked audio tapes from Mark Zuckerberg where he even mentioned outright Elizabeth Warren. Elizabeth Warren attacked Facebook on Twitter yesterday. So that's absolutely something to keep an eye on, and more strategists across Wall Street are saying you cannot put election risk to the side now. This is at least something that you need to be thinking about.
Bloomberg's Sarah Ponzak, thank you for joining me. And there's a big change in store for iPhone users. Apple is planning to release a software update that will let Siri start defaulting to message apps outside of Apple's proprietary one. Think WhatsApp instead of Apple's iMessage, and you won't have to explicitly tell Siri which app to use. It will figure it out on its own. This comes as Apple is facing more scrutiny over the power of its App Store. For more details, I go to LA, where I'm joined by Bloomberg Tech's Mark Gurman. Mark, why the change?
Yeah, thank you for having me. This is something they've been working on. They've been opening up Siri for the past few years. They have a new Siri Shortcuts app that allows more, expert users to write their own Siri commands. They opened up Siri to apps like Pandora and Spotify and iHeartRadio recently. Now this is another change to allow the apps, and as you actually extremely eloquently explained, default to what the user mostly uses for messaging and phone. So not a major shift here, but it's indicative of what the scrutiny they're currently under.
And so does this open up the door for more competing third-party developer apps now?
I don't think so. I don't think this is really going to have a significant change on developers. The big thing in our story comes down to showing that Apple now pre-installs about 40 default apps on the iPhone. And that's fine, right? I don't see an issue with that. The problem is that even though you can delete Apple's default apps like Mail, Safari, Calendar, Music, etc., I can go on all week, it's not able to replace those with third-party options like Gmail and Microsoft Outlook. And that's where the fundamental problem is. That's why Apple is seeing a little bit of scrutiny on its default apps strategy.
And does this now help ease some of that regulatory pressure over Apple's App Store?
The Siri change does not. No, this is just another bullet point that you can add to the list of some anti-competitive behavior on developers from Apple. But at the same time, they've created this large ecosystem that it's enabled, over $120 billion in revenue for developers. So, there's pros and cons here. And, it should be said that, Apple hasn't been fined. There hasn't been a big antitrust investigation into Apple because of this issue. But these are things that consumers should be aware about when they're making purchasing decisions.
You've quoted a lot of analysts and experts in your story that talk about comparing Apple to Microsoft in the 90s. What is that comparison, and is it legit?
Yeah, it's an easy comparison to make, but I don't think it's completely legitimate. I think it should be said that, Windows was extremely dominant back in the late 90s, early 2000s, and they made it impossible for users to, replace Internet Explorer with competing web browsers. What Apple's doing is they're allowing you to add additional web browsers, Chrome, Firefox, Microsoft Edge, etc. You just can't replace them on a default level. And of course, Apple's not strong-arming anyone here, and they're only 35% of the iPhone software market.
Well, and WhatsApp, certainly could be gaining on this. Any other apps that you talk about or hear about that could benefit from this change?
You know, any phone or messaging apps, starting with messaging apps, phone apps will be later. Could see a little bit more usage on iPhones from this. But of course, I feel like the diehard iPhone WhatsApp users were already using Siri for WhatsApp by simply saying Siri message, Taylor through WhatsApp.
Bloomberg's Mark Gurman, thank you for joining me. And coming up, no longer impossible to find because Impossible Foods is now in supermarkets. Where else will you be able to buy their meatless burgers? I ask the CEO, Patrick Brown, next. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg. Plant-based meats are here to stay. That's according to a new survey by Cowen analysts. Nearly 65% of the 9,400 people surveyed in the U.S. believe that products from companies like Impossible Foods are, quote, worth a premium price to comparable-sized beef hamburgers. And that's good news for Impossible Foods, which last month made its U.S. grocery store debut at 27 Gelson's markets. The company said it will expand that retail presence in the fourth quarter and in early 2020. Joining me now from the TechCrunch Disrupt conference here in San Francisco is Impossible Foods CEO and founder Patrick Brown. Patrick, thank you for joining me. As we mentioned, you've most recently launched into some grocery stores. Where can we see you next expand both regionally and product-wise?
Sorry, I didn't hear you. I didn't hear that question exactly. Say it again.
Yeah, Patrick, you just launched into grocery stores. Where can we see you next in that grocery store space regionally?
Oh, okay, great question. So, yeah, we deliberately launched in two regional chains that are relatively small in size because of a couple of reasons. One is that, well, it's our first retail launch, and we figured that it would be valuable for us to sort of do a test launch to really see how it's received, how to most effectively communicate to consumers and so forth. And secondly, we're still, just recently came out of what I would say is a supply crunch where the demand for our product got ahead of our ability to produce it. And so we didn't want to launch into retail too aggressively until we knew what the demand would be so we could make sure that we had the capacity to supply it. So now that we have some data from the launch. Oh, sorry.
No, go ahead. Please continue.
Well, so now we have some data from the launch, and I think that we have a clearer sight as to what our plans should be. We're definitely going to be doing broader launches next year, nationwide launches over the course of the year. And stay tuned, we aren't announcing any of them yet, but that's definitely going to happen.
Do you see more growth in grocery stores or restaurants and fast food chains?
Oh, that's a very interesting question. Well, we don't have enough actual data from retail, but I'd say what we do have suggests it's going to be humongous. Our sales in fast food have been growing as fast as we can supply them, and we have tons of inbound demand and so forth. So there's been huge growth there. We've had like 5-fold growth in sales this year, all in food service. So that's thriving. But in retail, it vastly exceeded our expectations for the two launches we've done so far. Our product has been by a substantial margin in all these stores, outselling ground beef from a cow. All the ground beef from a cow in Gelson's and Fairway, where we have some data, sells less than just Impossible Foods. And we've been outselling every other plant-based product by combined by more than a factor of 9. So it's looking super promising, and it's really exciting for Oh, sorry.
Yeah, you know, Beyond Meat just got a trial with McDonald's that's seen by people on the street as the holy grail. Are you still trying to push into McDonald's? Or are you happy with your current partnerships?
Oh, we love the partnerships that we have so far. You know, our partnership with Burger King has been absolutely great. They're wonderful partners. So no problems there. And in fact, the issue for us, as I said, is we're scaling up production as fast as we possibly can. We have more latent demand that we're seeing ahead of us than we can take on. And so, you know, we're being very, I would say, measured and judicious in taking on customers, because when we take on a customer, we want to be certain that we can keep them supplied. And yeah, so maybe sometime in a couple of years,
more about those
McDonald's will be a customer.
Talk to me more about those production issues then, since you've mentioned them. You had a partnership with OSI Group. Are you confident that they're going to be able to help you work out some of those supply chain issues?
Oh yeah, yeah. We're already mostly through the issue that we had early in the year, when basically the growth in demand vastly exceeded our expectations, and we had to scramble to scale up production, and it just took us a while. Now we've gone from one shift in our Oakland facility to 3 shifts, more or less 24/7. So that's a big increase in capacity, but more than 3-fold increase in production capacity. And then with OSI as a partner, one of the largest, if not the largest, food co-manufacturing company in the world, they have huge expansion capacity, and we're going to be able to increase capacity another 4-fold over the next several months, and then beyond that, there's further room for expansion. So I'd say we've gotten through this shortage period, but we're just being careful now not to get into another one. That's why we had to do the small-scale retail launch, and it's a good thing we did, because the demand has just been through the roof. And if we had gone nationwide at this point, we'd be right away in another shortage.
Impossible Foods CEO Patrick Brown, thank you for joining me. And speaking of food and goods, the U.S. announced its final list of retaliatory tariffs on European goods after the WTO's ruling on illegal aircraft subsidies to Airbus. Items include airplanes, coffee, olive oil, fruit, and cheese. To note, an extra 25% tariff will be slapped on Scotch and Irish whiskeys and French wine. Tariffs will go into effect on October 18. And coming up, Waze carpooling hits its 1-year anniversary. We look at how users are sharing their cars and not just their traffic tips. Our conversation with CEO Noam Barden next. This is Bloomberg. This is Bloomberg Technology. I'm Taylor Riggs in San Francisco. Last week, RBC analyst Mark Mahaney called Waze and Google Maps, quote, buried treasures for Alphabet. Mahaney also noted the potential for Waze to offer more solutions for Maps advertisers, thanks to all the data it's collected on users. And that comes as Waze reached 1 year of its carpool feature that just completed 100,000 shared rides last week. Joining me to discuss in New York, it's Waze CEO and founder Noam Barden. Noam, thank you for joining me. Congrats on the 1-year anniversary of Waze Carpool.
Thank you,
How many
Taylor.
people are using it?
So we have over 5 million Wazers who've opted into the service. And obviously they use it in different parts of the world. And you know, when Waze got started, our mission has always been about fighting traffic. We're known for shaving time off your route in different ways. But frankly, we're running out of options. We all feel this, right? Traffic keeps getting worse. And the only way we can really impact our everyday traffic challenges is by getting more people to every car. And this is what carpool is about. It's very different than ride sharing or other for-profit businesses. This is really about trying to work together as a community to lower the number of cars on the road and really improve our daily life. And
talk to me about how much revenue carpool contributes to Waze.
So we haven't released revenue numbers, but carpool in general is about sharing a car. And so the rider actually pays a portion of the cost of driving the car, and the driver gets a portion of that cost back to them. And so there is money changing hands here, but it's all below what would be considered profit. And this means that you're not paying taxes, you're not a commercial driver, you're not a ride-sharing business. We limit you to only 2 rides a day. So it's really about rides are happening anyway. If you're driving to work anyway, take someone with you. This is not about you finding a new job.
Do you consider Uber Pool a competitor? If so, how do you compete with them?
No, not at all. We're focused very much on the long haul from the suburbs to the city. Obviously, if you're in a city, it makes a lot of sense to use all the different ride-sharing services and all the different transportation services. But if you live in the suburbs and you're driving in and you're sitting an hour and a half in traffic, you really don't have many options, right? No one is building public transit. No one is investing in roads. The government's not going to save us. So we really have to take our future into our own hands. And we look in your car and you look at people around you, your cars are empty, right? We've got extra seats waiting there. And what we at Waze do is actually take care of the friction, finding someone, dealing with the payments, handling everything that has to do around that so that you can leave your car at home and ride with someone else.
Are you still doing data sharing with cities?
Correct. We're sharing data with a lot of different cities, and cities have been very supportive of our carpooling efforts because they see the same problem, right? If you think about a DOT or a municipality, their challenge is how do we get less cars on the road? So we have cities that are actually sponsoring our service. They're even subsidizing rides for their citizens. San Diego, Miami are great examples of cities who started as partners of us for data, but now have gone much deeper to help promote our service together to their citizens.
Are there any concerns about privacy in the data sharing?
So obviously you opt into the service, you only share the data that you wish to share, and our goal is to allow users to make their own choice. We'll show you who the users are, who could ride in the car for you, but you have to decide who you feel comfortable with. We have a feature that allows you to only ride with people of your own gender. We have a feature that only allows you to ride people from your own company. So it really depends on how you feel in terms of trust. But when you think about it, at the end of the day, you're leaving money on the table today by driving alone. It's extremely expensive. And at the same time, you're creating traffic. So here's a way to make a little money, save time, get into the HOV lane, and do really better for the world, because 30% of global emissions are coming from transportation.
You know, Noam, at the top of the show, we were talking about how an RBC analyst said that Maps and Waze really have the potential to be monetized and could contribute to Google and Apple. Do you see that monetization of Maps helpful, or does that hurt Waze?
So obviously, as any business, we have to be rational, right? We have to be able to have income, and we've got to be profitable, because if not, we can never achieve our mission. And there's a thin line between being mission-driven and being, rational in terms of your financials. And we're very focused on that. And this is why we have to have a rational business model. And there's tremendous potential in Maps in general, right? Transportation is a multi-trillion-dollar business that's all being reinvented in the current years. So there's a lot to go around. That being said, how and who is something that we're all working on together as an industry to try and figure out.
You know, Elizabeth Warren has been gaining in the polls recently, and she's talked a lot about breaking up big tech and breaking off Waze from Alphabet and Google. How do you respond?
I raise my hands and I say I'm not going to get into it.
Noam Bardeen, CEO of Waze, thank you for joining me.
Thank you.
Now, 4 payments companies that joined Facebook as founding members of the Libra Association are now rethinking whether to officially sign onto the cryptocurrency project. Visa, MasterCard, PayPal, and Stripe are undecided about formally signing onto Libra's organizing charter. The reason? Concerns about maintaining positive relationships with regulators who have reservations about the project. To discuss, I'm joined by Bloomberg Technology's Kurt Wagner. Kurt, why are they backing out?
Well, I think anyone who associates with Facebook these days has to think twice about it. I mean, this is a company that is being investigated by 4 different people for antitrust. It's constantly being called into Congress to answer questions about privacy. So anyone who writes their name on the same piece of paper that Facebook does really needs to think, is this the kind of company that I want to be in bed with?
And is it really about maintaining those relationships with regulators, or are there real fundamental concerns about the project?
Well, I think think anytime you talk about something this bold, I mean, the vision is that this will literally be a new global currency. There's a good chance this is not going to work, and that, you know, this vision is great, but that what actually comes of this is something a lot less than that. And so I think it's probably easy to say, hey, we're uncomfortable because we have relationships we need to maintain. I think there's probably also got to be some fear or realization that, do we want to line up for a project that may or may not work?
How concerned should Facebook be that some of those original 28 members are now rethinking of not signing up permanently?
I mean, it's not a good look. I think especially when you look at the 4 that you mentioned, I mean, these are the payments companies. These are the companies that are supposed to understand this industry and this opportunity better than anybody. And so for Facebook, it's not that they can't be replaced. We're told that there are hundreds of companies just waiting to join this association. Everyone can't wait to get in. So it's not as if they won't be able to find more companies to replace them, but it doesn't look great to have someone who was in at the beginning, even on the fence about if they want to move forward. It's just not a good look.
So what does Facebook do from here, right? They had this non-binding agreement. Some of the partners maybe don't sign on fully officially. What does that mean for the project?
Well, the next step is really just getting the charter official. And so coming out and saying, these are the people who have now signed, right? Originally, they gave kind of a verbal confirmation they wanted to be in. A lot of these people did press interviews. These companies did press interviews when this launched to say that they were interested. But getting them to actually commit and sign the charter is another thing. And so once Facebook gets the charter going, that really kind of solidifies this association, which allows them to, you know, create rules around what Libra might look like and actually start talking to regulators with more concrete plans. So the next step is figuring out who's in and who's out, and basically moving forward with the people who want to do this.
And to be fair, I mean, didn't David Marcus have a sense that because it was non-binding, that people who originally signed on may not come back? I mean, was that sort of a given at that point?
Yeah, I think so. I mean, anytime that you have someone just simply raise their hand and say, sure, I'm in, you leave the door open for the possibility that that doesn't actually happen when you have to get your name on paper. So I do think that there's been a lot of talk about, you know, original partners who have kind of been rethinking this. At the same time, you know, I don't feel bad for these partners. They know what they're doing, right? They wanted to be involved from the beginning because everyone wants to be involved from the beginning in something that is revolutionary. And so I think that, you know, we'll see who ultimately follows through with this, but I think Facebook is optimistic a lot of them will stick around.
And is this just more of a sign that the regulatory threats are real?
Yeah, I think so. I mean, anytime you're trying to do something at this scale and ambition, there's going to be a lot of questions. I mean, to Facebook's credit, they've said, we're not going to launch this thing until we appease all regulators. We'll see if they actually stand by that. It will be another scandal. I'm sure I'll be back to talk to you if they decide to go against that promise. But for now, I think that, you know, the regulatory concerns are real, but these are the types of companies that have been through this already. They know what they're getting themselves into, which is probably why some of them are maybe a little on the fence.
All things Libra, Bloomberg Technologies, Kurt Wagner, thank you for joining me. And coming up, Microsoft is getting back into the mobile phone business, and its first product, a foldable phone. We discuss the move next. This is Bloomberg. Microsoft has unveiled a number of new products, including a new Surface Neo laptop with a 360-degree hinge and 2 9-inch screens, and a redesigned version of its Surface Pro hybrid tablet laptop. But the star of the new lineup, a dual-screen foldable phone that will run on Google's Android operating system, jumping back into a market it exited years ago. To discuss, I'm joined by Yusuf Mehdi, Microsoft Corporate Vice President of Modern Life Search and Devices. Yusuf, why are you getting back into the smartphone market?
Well, Taylor, the way we think about it is we're in the Surface business, and what we've wanted to do for a long time is solve this problem for customers, which is how can you be really productive while being mobile? If you've had this problem like most of us, where you start an email on your phone, you say, hey, can I get back to you when I get back to my PC? It's because you've got that difficulty of getting that solved. We want to help that with Surface and have one that you can fit in your pocket with dual screens that lets you really be productive and creative.
And why the Android software?
Well, we have announced actually two dual screen devices today, Surface Duo and Surface Neo. Surface Duo, the one that fits in your pocket, we felt should run Android, because when you want to be mobile, you want to run the millions and millions of Android apps. It made sense to us to do that, and so we got that on there. On the Surface Neo, which is more of a PC-like form factor when you want to use it as a PC, we put a new expression of Windows called Windows 10X that lets you run full Windows apps and be super productive and mobile.
The smartphone hardware market is very crowded. Is your foldable phone, if I can call it that, your way of differentiating yourself?
Yeah, the way we think about it is exactly right. We think that there is an opportunity for a new category. We feel we're at the beginning in the tech industry of a new set of devices that we think of as dual screen. We see it in the research. People are actually 44% more productive with two screens when you've got the ability to your brain to work with right and left. We want to unlock this new category of computing that allows you to be much more creative, bring new types of apps into play, new types of postures with the device, things that you haven't seen before, from read mode to tablet mode to laptop to compose. A lot of great new capabilities. We think this is just the beginning. We see the whole industry moving on this opportunity.
Well, you mentioned apps. Am I able to use then both Microsoft's apps and Android apps on one, fold them over each other?
So the way we think about it, yeah, so on Surface Duo, what's going to be great is we will have a superset. We'll have the best of Android and the best of Microsoft together. And we've been working with Google to make that happen for today's announcement, and we're delighted about the collaboration we've got. We think we're going to have something special for customers.
I've been talking a little bit about the phone, for a lack of a better word for me. Talk to me about some of the new improvements on that laptop. What are some of the best improvements you made?
So some of the best things on Surface Neo are a couple things. First of all, as we said, really the ability to do things you can't do today. If you're on a Teams call or a conference call, you can now watch the video and on the right take notes and be able to interact between the two. You can add a keyboard when you want to and then get really productive and write notes, but if you want, you can take it off. You can flip it over, and so if I was, for example, doing this interview with you and I had my device with me, I could flip it, invert it, and see my notes while I'm actually showing you on the screen. So this ability to have new postures, to run full Windows capability, and be really productive while being mobile, that's a unique capability.
This is a very, very crowded market. In just the last few weeks, we've had hardware and product launches from Facebook, Amazon, Apple, you name it. Where does your hardware strategy fit into that competitive world?
Well, for us, the devices business, Surface business is really a super important business for Microsoft, really in three ways. First and foremost, it's become an amazing business unto itself. It's a multi-billion-dollar business now that's growing very rapidly. Secondly, we are actually inspiring the ecosystem of Windows PCs with our Surface devices. So, for example, we kickstarted the 2-in-1 category that most people didn't think it really exists or had a market. It's now a $30 billion market. And lastly, our devices really open up the opportunity for our broader cloud and business productivity market. So Office 365, Microsoft 365, they shine on top of our new Surface devices. And so that's really how we see the opportunity from where we're coming from.
And quickly here, what are you doing to make sure that my privacy is protected?
Well, at Microsoft, privacy, we believe, is a fundamental human right. We bake it in from the get-go. We're fortunate in that our business model isn't predicated on having to make money off other people's data. So we want to put that in. We put the user in control. So we maximize transparency and control of your data and let you choose what you choose to share or not share.
Yusuf Mehdi, Microsoft CVP of Modern Life Search and Devices, thank you for joining me. And coming up, the race to 5G continues. We speak to the Verizon CEO on what the company is doing to stay ahead of the competition. That's next. This is Bloomberg. The race to 5G continues. Verizon is focused almost solely on the technology to drive its next leg of growth. But the competition to the end line is becoming more tense. Verizon faces a potentially different wireless market in the near future if T-Mobile is able to complete its $26.5 billion takeover of Sprint. The combination would make for a three-way race with Verizon, AT&T, and T-Mobile to build and capitalize on the new 5G service. Joining me from the TechCrunch Disrupt conference in San Francisco is Verizon CEO Hans Vestberg. Hans, thank you for joining me. And I want to first start with 5G. Our analysts were expecting you to roll out 5G in about 30 cities by year end. Are you on track to make that?
Yeah, as we said when we had the earnings call in the second quarter, for the mobility case, we have a plan to have 30 cities by year end. We're 13 right now, so we're adding every week. We added New York last week. But we're not only doing that, we also have done 13 NFL stadiums, and then NBA season haven't even started. We believe that our 5G, for the consumer point of view, should be in the most dense and populated areas where you have a lot of throughput and data, and that's where our 5G is just crushing it. So that's where we are focusing right now on our mobility build. But as you know, we also do 5G home, and in the fourth quarter we're going to launch our 5G mobile edge compute, which is an enterprise service with all new capabilities of 5G.
You know, AT&T has been leading the charge a little bit in terms of nationwide rollout. When can we expect from Verizon nationwide rollout of 5G?
I think that what we are preparing right now is that we have the best 4G network in the market. We will continue to see that our customers get the best experience on the technology we have. We are giving them the first experience of 5G. We were first with the 5G home. We were first with the 5G with the smartphone. At the same time, we keep our 4G network at state of the art. So we will continue to do that. And when we see that the market is ready, and we will have a national coverage as well. But usually we speak less and we execute when we have it, and then we talk. So that's our strategy.
Hans, do you need more spectrum for 5G? Have you talked about an auction for some of those mid-bands that potentially could happen from the FCC?
First of all, there is an ongoing auction, so I'm a little bit sensitive what I can say about spectrum in general. But I've said it before, we have all the assets to launch a very competitive 5G experience, if that's coverage or millimeter wave for consumers, for large enterprises, mobile edge compute. We have all those assets.
We've talked about 5G that arguably holds a little bit more of an advantage for the business customer than the consumer. How can you capitalize on the business customer?
I think that all will benefit from it, but to be honest, design from the beginning was very much to make the world cordless for enterprise and society. So the 5G mobile edge compute that we're going to launch the first center at the end of this year, that's really where you can, as an enterprise, start innovating, doing a factory wireless for all your robots, for example, or putting up a 5G campus network or a private 5G network, all with a throughput, speed, and latency that is unparalleled what you have today, and suddenly you can innovate around that. So of course, myself have met many of the Fortune 100 enterprises in this country the last 6 months to talk to them, showing the platform we're going to create and how they can innovate to it. Because this is a partnership with us, with the customer, and probably in some cases some software developers as well that have softwares that is needed for it.
You know, it's interesting. I've been speaking with some analysts who've tried 5G in South Korea and other places, and some of them say it doesn't quite live up to the hype. How is the transition from 3G to 4G compared to 4G to 5G? Does 5G live up to all the hype?
I think that there is a huge difference. And 3G to 4G was, of course, an improvement of throughput and speed, which was visible. But to be honest, the move from 4G to 5G is even greater. It's the speed is so much faster, the throughput is so much more, and the latency. So, of course, it's all about an ecosystem that you sort of get devices out. And sometimes we talk a lot about consumers, and right now, basically, we have 4 phones already right now, smartphones out in the market. All of them are 5G enabled. So we see that whole ecosystem coming from consumers. But then, as you said yourself, but then you have an enterprise business, and we also have a 5G home business where we actually are doing the last mile with 5G instead of fiber, which is a total different way of thinking about the business model for fixed wireless access, bringing broadband to your home. So it's very different, the 5G, because you can have several business cases on the same infrastructure because it's the same network. It's the same infrastructure you're building on. It's not a separate network for all these business cases I'm talking about. It's the same.
Juan, I want to talk about the fundamentals of your business. When can we expect 5G revenue to offset the decline in the wireline business?
I think that we have been very clear when we had our capital market days in February that when it comes to the mobility, we will have an impact of 5G in 2021. When it comes to 5G home, the same, 2021. And when it comes to 5G mobile edge compute, 2022. So we have been very clear with that. And remember, we're a large company. 4G will not go away. It's an extremely important sort of technology, and our customers on 4G. And remember, that's not strange that you will have 4G customers for a long, long time. So you need to continue to have the best 4G network as well.
And have you modeled out any potential competition, subscriber losses, if that T-Mobile Sprint deal does go through?
I think that we all need to work with our own assets, of course. Then it's happening a lot in the marketplace, which you, of course, are listening and thinking about. I think that whatever is happening, we have our strategy and we're going to execute on our strategy. We believe in our network, we believe in our 5G platform and the use cases we have, and that's what we're going to execute on. Then, of course, as we see more competition and more discussion around 5G, that just proves the case, how important 5G is going to be for the country, for the enterprises, and for the telecom industry.
You've done a restructuring recently. Do you feel like you're right-sized?
I think that, I'm not sure if you're referring to our voluntary program that we had in November 1 year ago, which ultimately was 10,400 employees leaving us over 6 months. That is finished right now. So I think we have done some process changes in the company. We have also started outsourcing some more IT that we haven't done before, and ultimately 17,000 employees has left the company in 12 months. So we continue, of course, to be efficient, but that's part of what we do every day. But not only that, we're also looking for the new growth opportunities. So it's how you run a company.
Right. Verizon CEO Hans Vestberg, thank you for joining me. And that does it for this edition of Bloomberg Technology. Check us out at Technology. We're live streaming on Twitter, and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg.